Hello and welcome everyone to the Tech Podcast series. This is Lakshit Pant from Azure Developer Community, and we are back again with another episode of the Tech Podcast series where we explore all the different landscapes of technology with all the new ventures that are coming in and how they are shaping the industry, how they are building the new future of India. And in this episode, we will dive into the visionary journey of Anirudh Bhardwaj of the city of Recur Club. And as we diving deep into this podcast, I will try to explore how the fintech is exactly working, how the fintech market and what are the revolution that are happening along with the generative AI and all these new fancy terms coming into the play. So not wasting much more time, let's quickly start this podcast. So let's start with a quick introduction of Anirudh. So can you please quickly give a quick introduction of yourself and how you have landed this?
Sure. Thank you, Lakshit, for having me here. Hi, guys. This side Anirudh. I'm the CTO with Recur Club. I have around 13 years of experience into software engineering. Graduated in the year 2010 from NSIT. Spent a good amount of my career with Make My Trip while I was working with the hotels team there. After that, I joined Airtel as the part of their Airtel digital journey, and I was taking care of the entire Airtel Thanks platform backend, and I was basically pretty much responsible for right from designing to building scalable solutions for Airtel. After that, I happened to have a small stint of few months with the education tech startup, wherein I got an opportunity to understand on how quickly or how important your decisions are when we work in a startup to frame. About my journey with Recur Club. So pretty much associated with the organization from day one. Eklavya Gupta, who's the co-founder at Recur Club, is a dear friend from my graduation days. One day he pitched the idea of how he's planning to democratize the capital for founders, how he's planning to build a platform that has an easy access for founders to raise capital. Because in an ecosystem wherein every government decision are moving in the direction of helping startups grow at a huge number and basically enabling more and more entrepreneurs in the organization in the country, it was very important for someone to pick this problem of helping them with debt as well. While there was a good access of equity for them, but there was with the traditional banking or loan systems, there was not a good access for them in terms of debt capital. So that is what Recur Club wants to solve. And since it is a completely digital fintech platform, we have focused a lot into technology, building those tech underwriting system, 100% paperless journey for business loans, which is one of the kind in the industry. And I basically take care of the entire technology team and working closely with the business stakeholders, understanding their needs, and then basically building products, understanding the user problems, and then building products for scale and maybe moving in the direction using, as Lakshit said, right, with Gen AI coming in, using the different kind of tools and technologies available in the market to provide the best experience to our founders and maybe help them grow in their growth journey.
Yeah, that's fantastic to know two engineers thinking together about making a building a club or maybe building an organization together in their hostel room or something like this. That's always amazing to know, and that's where the real magic happens, right?
Yeah,
Yeah.
actually, they're three engineers. So Abhinav and Eklavya, the two co-founders. So Abhinav graduated from IIT Delhi, Eklavya from NSIT, and both of them then met in IIM Calcutta. They thought of this journey, and now basically, I was happy to participate with them. With Abhinav, he's one of the smartest guy I've ever met, and he has a clear nudge of what he want to build in terms of the user experience for all the founders. So yeah, it is pretty much exciting to work with two smart people as your founders, and yeah, the journey has been exciting so far.
Definitely, when you trust on your, partners, it's the journey always remains the amazing, and it becomes more, I will say experiential when you enjoy what you do, right? So I just wanted to, when you mentioned about the technology part of the Recur Club, you mentioned a couple of things, right? I wanted to understand if we look from a 30,000 feet from a general perspective, this is more like a community when we talk about venture capitals, when we talk about funding perspectives, this is more of a word of mouth sometimes. Sometimes it's more of a connections, networking things. How does the tech goes behind, and what are the technology that you have built? Is there any CMS that you are building, any SaaS platform, or how the thing is happening behind?
Awesome, Lakshit. So I'll take it into two parts. First, we'll see how the journey of capital flows into the business. So
Okay.
basically, whenever a founder has to raise money, there are typically two mode of ways that they can raise. They can either dilute their equity and raise directly from the venture capitalists, from modern VCs, from micro VCs, or they can basically raise debt in the form of basic term loans, working capital loan, or alternate financing from modernized platform like ours. We typically help in this latter part of the capital journey, wherein we help founders raise capital without diluting their equity by assessing their current cash flows and predicting their future cash flows.
Okay.
So, as we say that we assess their current cash flows and predict their future cash flows, the technology piece already starts from here. Now, coming to the technology part on how Recur Club has typically solved this problem. So, if we take a 30,000 square feet view, there are typically broadly three steps that are involved in the journey of the loan assessment. First is their onboarding, which involves them submitting all of their financial information that is securely stored with us, and basically then extract the relevant information is extracted from it, transformed into a model that we feed in, and then basically the output of that model comes in. So the first one is the 100% DIY onboarding journey for the consumers. We have utilized a lot of different technologies like OCRs for reading data from documents and then building up models on top of it. We've built our own regression based classification journeys to classify the bank statement, classify the GST based information. Once that is done, the second step is evaluation, which our underwriting team does with the help of this data. So, this data, once fed into the model that is already there on the platform, a continuous model that is learning from the past journey, from the past evaluation, gives us a number that can be given to the founder. When we say a number, that number is how much loan can be processed for that particular founder, at what price, at what tenure, and what are the typical risk mitigation steps that we need to take for this process in this particular loan. So that's the second step. The third step is the entire KYC and disbursement piece of the loan. Now, since it is a business loan, if we talk to founders, and I'm sure some of you might have interacted with them, there's a lot of paperwork involved in traditional ways of financing, like
Right.
hundred of KYC documents that has to be uploaded. We have everything uploaded on the platform. It is then recognized again by using various type of OCRs. We recognize all the various kind of unstructured structured data, verify whether the KYC is legitimate or not, and then once that KYC has been verified, is the time that loan is dispersed to the particular founder. The loan is dispersed from the NBFC investors that are on the other side of our marketplace.
So basically, the partners the venture capitals or the VCs, or maybe the young age startups who are looking for the funding. So who are the partners?
So the partners are typically the NBFCs. The money is being pulled in by the NBFCs, which are your non-banking financial corporations, mostly institutional investors. We have some banks on the our platform as well. So it is typically the banks and the NBFCs, or I would say institutional investors that are funding these young age startups, new age startups, based on the evaluation that the technology of Recur Club has done.
Also, I am I'm exploring how can you just walk us through the key components of this model, and how it empowers the business to raise growth capital without the usual equity dilution, right? Or maybe the restrictive debt.
So, if we talk about the main component, right? Ultimately, what is the mode of giving money to someone that they are able to return? If it is not in the form of equity, if it is a loan, बड़ी simple सी चीज़ है, they have the capacity to return it. Now, sitting at day zero, how can you evaluate whether they will be able to do it 12 months later or 18 months later? So
Understood.
that is the core competency that we have built. Basically,
Like,
we fetch all their financials. We put different models. There are some in the market, and we have our in-house proprietary underwriting model as well, which we put on it. Get the cash flow projections for the next 2 years by assessing their historical data, by assessing the macroeconomics and everything, and then predicting whether they'll be able to repay the loan or not, and giving them a rate underwrite.
I really wonder what kind of engineering you guys are doing behind, because this is something, building something for future that is still a very controversial thing, because there can be of something, because there will be inconsistency, right? So now, moving a little bit ahead, let's take it from a, let's see, from a fintech disruption perspective. What makes all these fintech startups, disruptive in the BFSI sector, if you will see, and why should investor be paying attention to the all of these?
I would say investors are already paying attention to the fintech piece. Fintech was the third largest industry to raise funds in 2022. If I'm not wrong, it was somewhere around $6.7 billion worth of funds were raised by fintechs in India. Uh, the reason of fintech also expanding is majorly because of two things. One is the way government is moving different digital initiatives. If you've heard about how digitization is helping the banking sector and the entire payment architecture, so a very interesting and a very revolutionary concept of OCEN, which is your Open Credit Enablement Network, has been launched by government in July 2020. Now that has clearly stated our direction to move when it comes to lending, right? The government is now trying to prepare common methodologies, common API structures, common processes, and a similar kind of a workflow when it comes to lending to borrowers. They've categorized different categories and they're trying to build it that way. That, along with the need of credit in India. So, if you see, we are still a growing country. We have crossed 3 trillion GDP, but we are still a growing country, right? And there's a lot of demand of debt. The debt is still underutilized in India. If you compare it with the developed countries, with the likes of US, we are still behind when it comes to on the amount of debt utilization that India has. So there's a big space that can be utilized. Now, the third thing, which is actually, I would say, kind of restricting the speed of which debt can be used by the new age founders, is the traditional models that the banks have been using. And the traditional ways of giving loan by using collaterals, by using securitization, is typically something which will not work with a new age founder. You talk about a SaaS platform, right? SaaS वाले के पास क्या होगा collateral देने के लिए? It's his IP,
Right. Right.
right? So we are trying to solve for the builders. We are trying to solve for people who are going to take India to the next level, and that is our true mode. So we are here to enable founders. We are in their journey as a co-founder, as their consultant entirely, so that we can help their reach their growth where they want to. Capital is
And
one problem that we have solved.
yeah.
We are also, as you talked about the SaaS product, right? So since we have 2.5 years of experience now into evaluating where financial information that they have, we have launched a product for all the founders that are there on our platform, which is called as Recur Insights. Now, what
Okay.
Recur Insights does, it gives them a relevant information on the financials, on the financial health of the organization, on the direction these guys are moving, where are they benchmarked as compared to their competitors, what are some of the alerts, what are some of the actions they should take on whether their revenue is decreasing or their CAC is increasing, or those kind of things. Giving them a one pager dashboard, a relevant dashboard to have a business outlook in one go, is something which we have started investing in, and that is one of the SaaS product that we have built few months back and is being used by most of our founders.
And again, I'm asking you a very general question. And how do you find these founders? Where these all these fresh startups are very tough to find. How do you access their capabilities? That this is something we should, because you definitely do not want to waste your resource or maybe your energy on something unnecessary, right? So, what goes behind, right? How do you do your R&D work here?
So if we talk about assessing the organization and the founders. So while the organization health is mostly covered by the different financial information that we gather from them, uh, the assessment of founder typically happens by accessing data over multiple places on the internet and then smartly using Gen AI in combination with that to give us
Okay.
a report card of the founder. So
Okay.
assessing what was their educational background, what all companies have they worked with, are they a fresh founder, are they fresh out of college, is there any news around them on something, what is the macroeconomics of the sector they are working upon. So not so while the traditional, or I would say the core business model is to help them, help us assess the business. But this macroeconomics understanding is done by, basically we've capitalized Gen AI a lot here, and by understanding the demographics, the education background, different veracity of the age of the founders. Basically, we have categorized the age of the founders as one of the key parameter on how comfortable they are growing. Yet, young age founders are typically very, very comfortable than someone who is maybe slightly older. So, those are the different things that flow into this model of our evaluation, helping us evaluate these founders better.
I really love your clarity because the TG that you have decided is very tough. For any any start, any organization, dividing or maybe limiting its TG is very tough, and you have really segregated that part. That's very fine. But I'm still wondering, how does is there any regulatory challenges present in the market in the fintech industry, and how does these regulatory challenges affect the growth of any these startups, and what should maybe from an investor's perspective one should consider while navigating in this dynamic landscape?
So I think the uh, uh, I think the news that has been always floating is that there are a lot of regulations put in by RBIs to restrict the way lending works. How
Hmm.
we have always seen it, that they are empowering the right measures or the right way of lending. If you see in P2P, there were, I think, lot of organization, and obviously we would not name them, that were typically just fooling away the customers with charging like 45%, 50% IRR from them, and like fooling them without them knowing on what is happening with them, right? So
Right.
we really need a regulatory body to restrict these kind of things. We have always seen or welcomed the changes that RBI has been doing. Obviously, there are a lot of regulations, but for something as critical as business lending or business loans, we think it is important. RBI typically talk about two, three things in particular when it comes to regulation. So one is obviously the data privacy of the users that you are typically evaluating, which is very, very important, right? For a founder, their startup's data is
Absolutely
their
right.
biggest asset. You cannot mess up with that, right? So that
Yes.
is the first thing that RBI talks about. The second thing RBI talks about is you should not fool, or you should not charge enormously to the borrower. Now that is a perfect thing, right? We are here to make money, but not at the cost of somebody else's life. So that way I think it is perfectly fine. The third thing is obviously they talk about how do you collect, what are your payment architectures, how can you seamlessly build those collection frameworks to collect money without much putting much hassle in their life. So we pretty much think that these regulations are here to stay, and they are for the benefit of our country at a whole. Obviously,
Okay.
investors who are investing in such kind of organizations need to have a good detail on how these regulations work, because that would define your product's landscape, right?
Right.
Whether you can innovate in that particular direction or not, whether you can go that extra mile or not, those kind of things would definitely help. But these regulations, I think it is, if nothing but, is in the right direction for our country.
Let's talk about a little. Let's be optimistic, and let's talk about a little bit more about the future tech trends that are going on, and the new fancy terms that has been came into the play after post-COVID, especially like blockchain, AI that we heard about. I just wanted to know from starting. We will talk about blockchain AI a little bit later, but what are the current tech trends that you see in the fintech investment sector or with the fintech sector, and how one could identify promising opportunities from a from a jobs perspective, from a opportunity making perspective, from a maybe a founder co-founder perspective? What are the opportunities that you see that are rapidly evolving this sector?
So I think taking a step back, since we talked about COVID, one thing COVID has obviously taught that everything or near everything can be digitized, right? So
Right.
if most of the things can be digitized, if most of the thing can be made available on a mobile app or on a website, then it clearly means that organizations would need smart engineers, smart software engineers, software personnel to work with them, right? Software
Right.
engineering now becomes the core of organizations like telecommunication in Airtel. Software become one of the core team post COVID. So that is how the world is moving, right? When it comes
Right.
to tech in India, if we categorize fintech into different pieces, and you talked about blockchain, right? So blockchain provides an enormous opportunity when we come to wealth tech kind of an organization. When we talk about wealth tech kind of an organization, where you basically you invest in stocks, right?
Okay.
You vary to invest in crypto. There's a reason, right? Because of the limited knowledge available in the market. If we have well tech organizations that are able to recommend portfolio based on my risk appetite, I think that is the direction we want to move in. आप इतना stocks में डाल दो, इतना म्यूचुअल फंड में डाल दो, इतना क्रिप्टो में डाल दो, प्रॉब्लम खत्म.
So now let's go ahead with the adoption of AI in financial services. How do you think the AI is transforming all the fintech and financial industries or services? And what can be the practical implications or investments from a business perspective that can help AI into their operations?
So I think much before Gen AI, organization like ours have been investing into decent AI models to evaluate or predict the future cash flows of organizations. As simple as use case predicting the future cash flows, to as complex as judging the rating of the organization, our internal proprietary rating. How do we do it? Uh, when it comes to the advantage that AI is going to build or get to the entire fintech industry, it is enormous. Right now, 98 to 99% of the loans are not paperless when it comes to business lending. The business
Okay.
lending, it is a completely paper cumbersome kind of a loan process. By the decent use of AI along with OCRs, I think this is one space where I see a low hanging quick win for most of the banks and fintech when it comes to processing of loans. The second thing, obviously, with Gen AI coming into piece, you have access to information much more than before, right? Earlier, you had to like scrape 100 websites to get the relevant information. Now you can just probably make a prompt engineer sit with alongside you and have him design the right set of prompts, and you can get the relevant information within few seconds. So evaluation metrics become much more, I would say, rigid, and at the same time they become much more powerful, as you can now access multiple macroeconomics, multiple data at multiple websites to get the relevant information. So I think AI is definitely going to help. Some of the biggest challenges that people are not able to solve yet, that आज भी आपको बिजनेस लेंडिंग करनी है ना, तो आपको तीन चीज़ें चाहिए होती हैं. एक
Okay.
कंपनी इन्वॉइसिंग का डेटा, एक कंपनी के बैंकिंग का डेटा, और एक कंपनी के MISs.
Okay.
If we talk about MIS are typically pretty specific in a standardized format for that company. Every company will have their own format of an MIS till the time it has been converted into an audited financial.
Okay.
Now, and just imagine a kind of a model कि आपके पास सिर्फ बैंकिंग की डेटा है और उससे आप कैश फ्लो जनरेट कर लो. That is going to change the world, right? You don't need anything else. So those kind of classifications, those kind of thoughts, and we are near, I think we are nearing completion to that project. I think by the end of the December we'll have a very good success in that project. But yeah, that is a use case which once gets solved, you don't need 10 different documents to evaluate, right? बैंक स्टेटमेंट चाहिए जो हर किसी के पास होती है, and you'll be able to provide the data. And this I'm
That's
talking about businesses, not individuals. Individual lending is फिर भी comparatively easy because the ticket size is low and the data has
Right.
been more or less digitized by government.
Right.
But business lending, there's a lot of scope, and with AI coming in, I think I see a lot of disruption happening in the next 2 years. You
Okay.
have to jump on
So
the train, otherwise you'll fall apart.
So, for maybe as we are reaching to the end of this podcast, I would just like to know from for all the young entrepreneurs or maybe students who are just fresh graduates or all the aspiring learners, what advice you will give? How should they see this fintech industry as a career opportunity, and where should they transform their maybe the way to, right? Where should they? What could be the best driver right now?
So I think the piece of advice that I would love to give to the students is one thing which, if somebody would have given to me, I would have done a bit better. Is that focus on the basics of computer science is pretty strong. So those 4 years which we think are there to for enjoyment, yeah, they are there for enjoyment. But if you really want aspire to be a software engineer, or you aspire to build a product that is going to bring disruption, you need to have command on some basic computer principles, which starts from your small, I would say, subjects like microprocessor 8086 to
Okay.
something like a computer system design, computer system architecture, your algorithms, data structures. You have to be thorough with them because that lays the foundation of how an engineer is going to shape up in the career. When it comes about fintech, fintech is definitely here to grow. I would not say it is here to stay, it is here to grow because we have just started. India's penetration in the financial technology world has just started. While we are the market pioneer with the UPI disruption that India has done, but there's lot and lot of scope of debt marketplaces, lending, insurance tech, wealth tech. So fintech is here to stay, right? It is here to grow. What we I would also have an advice for the engineers specifically for the engineers that spend some time in understanding the financial dynamics as well. अगर fintech में नहीं भी लगी तो I think you'll be able to manage your finances better.
And any preferable resource you would like to advise?
So I think very basic. I think Coursera पे एक finance 101 का course है. That's like a very basic few hours course that give you a base, and then Coursera has multiple recommendations based on that. Based on your interest, I think you can just start reading and going in that direction because that will really help these developers, these engineers, understanding the business that they're trying to solve. क्योंकि इंजीनियर सबसे ज़्यादा अगर आई वुड से कहीं मात खाते हैं या if they suffer is understanding the complete business context. So to understand the complete business context, it is very very important to understand the finance side of world as well. And अगर आप
Right.
fintech नहीं भी कर रहे हो, it is going to help your life. You are sorted with your financial management, जिसके लिए आपको अभी कहीं बाहर से एक इन्वेस्टमेंट बैंकर हायर करना पड़ेगा. उससे अच्छा आप खुद ही अपना वेल्थ मैनेज कर लो.
Definitely, that's again a great piece of advice that you have shared with all the. That's more like a gem for all the aspiring learners, and you have also defined it very clearly how to and where to focus on, just on the basics and all these that we see as in our college days, like. And I really agree with the point that you made about the, because we see the real time examples of government, how much they are focusing on this fintech industry and what kind of investment they had made. When we see about UPI and PCI, the BBPS platform, all the BOUs, COUs, and again how again big investment they have done, and again they are again moving ahead for more. So this is something very, this is fintech is going to be very big. I assume it's going to be very big. So let's try to build something new and build for the future, and thank you for all those kind advices. And as we conclude this insightful episode of the tech podcast series, I will just extend my gratitude for sharing such amazing thoughts of yours and about the Recur Club and what the work that you are putting in, from defining how the business raises to all the disruptive models of equity and everything. So to our audience, stay tuned for inspiring stories and groundbreaking innovations in the world of tech. This is the Tech Podcast series where we explore the minds and the shaping futures, and one episode at a time. And Thank you, Anirudh, for joining us today, and it was really my pleasure to host you.
Thank you. Thanks a lot, Lakshit. I think uh, I really enjoyed. I think you touched upon some very important and basic questions that needs to be answered, and I'm glad that I got an opportunity to answer these questions. Also, I think if there are founders or builders listening to this call, I would say that if you're building, just uh, don't shy away from building if you're not getting access to capital. Record Club is just a click away, so you can just come, or even if you need any kind of suggestion. So we do have our advisory kind of role as well. If you want to basically take some advices, I think we are reachable over LinkedIn. So you can reach out to us and we can probably help people learn more.
Sounds good enough, right? So all the aspiring entrepreneurs, now you got the kick where to spam on. So thank you, Anirudh, for your taking our time out, and thank you everyone for listening to this podcast. This is Lakshit Pan closing for this podcast. Thank you. Bye bye.
Thank you. Thank you, Lakshit. Thanks a lot.